Concept of block of assets. Concept of, write this heading, concept of block of assets. Now this is again a concept of taxation, concept of income tax. Because it is not done in your class, I have to discuss this. Please carefully listen to me, all of you. You know, in income tax law, each type of asset has a different class for applying depreciation. For example, machinery is a different class of asset. Building is a different class of asset. Rate of depreciation that is permissible under tax law, is also different for each class. Now, generally in financial reporting, that is accounting, we call these assets as class of assets. We call these as what? So building is a different class of asset, machinery is a different class of asset. Same thing in income tax law is not mentioned as class of asset, but as block of asset. But what we have as a major difference in accounting and income tax law, in accounting, the depreciation and profitability of each asset is separately identified. Though the accounting policy applies to the whole class of asset. For example, if you are using SLM, correct, for one particular class of asset, that whole class of asset you will have to apply SLM. If you are choosing to report a particular class of asset at its revalued amount instead of its historical cost base, the whole class of asset you will have to report it that way. But income tax law not only classifies this class of asset as a block, but depreciation will not be charged on individual asset. Depreciation will be charged on the balance of block. So let me explain one scenario. Let us identify that I am a company having 5 different machines. Machine 1, M1, M2, M3, M4, M5. M1, M2, M3, M4, M5. I have how many machines? 5. M1, M2, M3, M4 clubbed together, its WDV was 70 lakhs. Its WDV was? M5 WDV was 10 lakhs. So total block WDV will be? M5 was sold for 6 lakhs. M5 was sold for 6 lakhs. So tell me, think logically. Accounting viewpoint, if you would have dealt with, machinery 5 which had WDV of how much? 10 lakhs, you sold it for? 6 lakhs. You will report a loss of? 4 lakhs. And M1, M2, M3, M4 are as it is, right? Yes, their carrying amount will be, or their WDV will be 70 lakhs. Next year, in accounting, you will charge depreciation on 70 lakhs, correct? Income tax law abolishes this practice and it brings the concept of block of asset. It says, okay, machine M1, M2, M3, M4, M5, all should be put in one block. M5 you sold for how much? 6 lakhs. Its WDV was? How much loss you suffered? Agreed, you suffered a loss of 4 lakhs. But is your block empty? No. We will add this 4 lakhs to your balance of block. Means it was though already part of it, but I am saying we'll include it along with your block, and your block balance will be 74 lakhs. So you know, when you charge depreciation, depreciation is also part of ACF. Depreciation is also a part of ACF. You know, PAT plus depreciation is part of ACF. Yes or no? Yes, so depreciation also helps you generating cash, and your loss which will lead to what? Tax saving will also lead to generation of cash. So you are actually not generating cash, You are saving an outflow. Saving an outflow is as good as an inflow earned. So, if this block of asset concept wasn't there in my example, sale of M5, 10 lakhs WDV, 6 lakhs sale value, loss 4 lakhs, you will charge loss and you will save tax on that loss. And for other assets, you will charge depreciation on the remaining base value of 70 lakhs and your tax savings because of depreciation will arise on 70 lakhs. Ultimately, you will save tax because of that loss of 4 lakhs and you will save tax because of this depreciation of 70 lakhs. Ultimate tax saving will be the overall base of 70 lakhs plus 4 lakhs. Income tax law clubs everything and simplifies one thing. Your block opening balance, all 5 machines will be clubbed together. M1, M2, M3, M4, M5. All 5 machines clubbed together. M1, M2, M3, M4, M5. If all clubbed together, what will be the opening balance of block? 80 lakhs. 70 plus 10, 80 lakhs. We will not look into individual WDV. So when you sold this, what happens? When you sold this asset, what happens? You sold it for how much? Income tax law will simply say that block did not become empty. So whatever you sold for is the money that you have already recovered. 80 lakhs was your WDV of the entire block. How much did you recover? Closing balance of your block, which will become the base of depreciation, will be 74 lakhs. Let me now bring forward another example which will further clarify the matter. Assume that I am talking about replacement of machinery. I am talking about what? Replacement of machinery. If I am talking about replacement of machinery, and I am assuming now there is only a single machine in the entire block. What did I say? There is a single machine in the entire block. Now I'm not talking about 5 machines, single machine. Listen to me carefully. That single machine WDV was 20 lakhs. Single machine WDV was 20 lakhs. You sold that machine for 16 lakhs. Single machine, and that too you sold. You sold for how much? How much is your loss? Because we are talking about replacement of machine. You then bought a new machine for how much? 60 lakhs. You bought a new machine for? Now you tell me, how would you deal with this situation from income tax viewpoint? Old machine WDV was how much? 20 lakhs. I repeat, old machine WDV was how much? 20 lakhs. You sold it for? 16 lakhs. You sold it for 16 lakhs. WDV 20 lakhs, sold it for 16 lakhs, resulting loss? 4 lakhs. And what about the new machine's cost? 16 lakhs. If I don't introduce this concept of block of asset, then what generally you would have done? Tell me. You would have considered short-term capital loss of how much? 4 lakhs. And then the new machine depreciation base would have been 60 lakhs. Simply 60 lakhs. But now we are introducing the concept of block of asset. The moment you introduce concept of block of asset and I tell you that there is a single machine in the block, WDV 20 lakhs, you sold it for how much? 16 lakhs. WDV how much? 20 lakhs. You sold it for? The block got empty and then you purchased a new machine. Income tax law says, Illa, That is not we should do. Income tax law says, opening balance of your block was how much? Don't make subtraction first. First make additions. Opening balance of your block was how much? Cost of new machine first you add. 20 plus 60 became 80 lakhs. If 20 plus 60 became 80 lakhs, then subtract the sale value of old machine. 16 lakhs. So your revised balance of block will be 64 lakhs. Revised balance of block will be, if your revised balance of block is 64 lakhs, your block is not empty yet. So don't report a short-term capital loss of 4 lakhs. Do not report a short-term capital loss of 4 lakhs. Instead what you do, you change your depreciation base to 64 lakhs. Opening balance of block was 20 lakhs. Add cost of new machine 60 lakhs. 20 plus 60, 80 lakhs. Minus the sale value of the old machine 16 lakhs. Your revised balance of block will be. Ultimately, income tax law considers that your cost of 64 lakhs, we will let you charge depreciation on 64 lakhs. So 64 lakhs you put to your P&L gradually over the years by way of depreciation. Ultimately 64 lakhs will go to P&L, yes or no? Gradually by way of depreciation. If block of asset concept was not there, then loss of 4 lakhs would go to P&L in the nature of short-term capital loss, and then depreciation would not go to 64 lakhs, depreciation would go to only 60 lakhs. Ultimately, 60 lakhs as well as 4 lakhs will be charged to P&L, but 60 lakhs and 4 lakhs will have different nature. 60 lakhs depreciation, 4 lakhs short-term capital loss. But because of this block of asset concept, what you will do? You combine the whole thing, and during the year, single asset is also, if it is sold out, but a new asset is purchased, then income tax law says opening balance plus additions. Opening balance in my example was 20 lakhs plus additions 60 lakhs minus sale value that you have recovered 16 lakhs. So remaining balance of block will be 64 lakhs. No capital gain, no capital loss arising over here. Wait. One student then comes to me. Because if I stop here, one student definitely will come to me. That student comes to me and tells me, sir, opening balance of block is 20 lakhs. We sold it for 16 lakhs. And we bought a new machine for 60 lakhs. But do you know, sir, what happened? I said, what happened, beta? The student says, sir, first sale happened and then purchase happened. Date was different. It was not same date. We first sold the asset, then we bought the asset. So, then block became empty. Income tax law simplifies this point. Irrespective of the date, you pick the opening balance, because the language used for block of asset concept is opening balance of block, add additions during the year, even if the addition has happened on the last day of the year. It says what? Add additions during the year, then less sale during the year. Addition during the year, whenever happened, first you add. Sale during the year, whenever it happens, you subtract only at later stage. Income tax law will not let the block become empty in case of replacement. But finally, one fine day when your project life is over and you are winding up the whole project, that time the block has to become empty, correct? Because that time you are winding up everything, all your assets you are disposing of. That time the block will become empty. That time capital gain or loss may arise. But during the time of replacement, capital gain or loss won't arise. what will happen is the balance of block of asset will get revised. What I will do is, I will put forward this same point in upcoming questions, so that when you are actually dealing with calculations, you will get much more clarity. You will get much more clarity. I am now going to deal with a very, very important concept, that is dealing with replacement of assets. Dealing with what? You know what I am going to do? We will be having two categories of replacement decision. Two categories of replacement decision. One is about whether the machine should be replaced or not, and another decision is about if the machinery has to be replaced, what is the right timing of replacement. For example, ACs in this classroom require replacement or not?
Yes, sir.
You all agree it requires replacement. We have already requested. Now it is all about when the replacement happens. So there may be 5 possibilities that KS Academy may decide. Replace immediately, replace after 1 year, replace after 2 years. Which will be most beneficial? Replace? That would be most beneficial. But here, when we deal with questions, we will also look into when the replacement should be carried out. So 2 types of questions will be dealing with replacement decisions. One category will be, there is a machine, existing machine. We are thinking of replacing that existing machine with a new one. But we have yet to decide whether replacement will be beneficial or not. That is one category of replacement decision. Another thing is, we have decided that yes, replacement has to be done, but when should you replace? Now or little later? That is the timing of replacement. So one category of decision will be whether replacement should be carried out or not. Another category of decision will be what should be the appropriate timing of replacement. So let us do one thing. Let us write one more heading. After this heading, concept of block of assets, you will write another heading, that is decisions regarding replacement of assets. Yeah, whatever. If you have just written the heading as replacement of assets, even that is fine. But important thing that I make you write now, you please write that. Under capital budgeting, please write under capital budgeting, there can be 2 different categories. There can be 2 different categories of replacement decisions. There may be 2 different categories of replacement decision. Number 1, decision regarding whether a particular asset, decision regarding whether a particular asset should be replaced or not. And number 2, decision regarding timing of replacement. Decision regarding timing of replacement. decision regarding timing of replacement.